Okay guys, it's Thursday the 10th of December today. I just want to quickly go over this trade. I didn't catch the start of this trade. I wasn't planning on making this into a live trade. However, it's done a couple of things that I want to go over that you may find quite useful. So, first of all, the trade for me was completely off of market dynamics. My first entry was up here, right at the open. The market then fell down, rejected. It then gapped down and fell down again. So this looked like an incredibly bearish bar. So let me just first of all mark in a zone here. This is actually a zone. So the entry could have came off of the pin bars, which is like a second confirmation for me. But anyway, so I entered at market dynamics. The market then fell away, rejected, and then fell away again. You can see how close it came to the stop down here. So bottom of the candle down to the stop. So we're about 5 points away. Now, the reason I was confident to hold on to this, the first reason was, you can see right here that the candles have gapped down. So this one's closed, and then it's gapped down, and this one's ran away. Now, on the 5-minute chart especially, these gaps quite often close very quickly. Now, it's not always they close very quickly. Sometimes this might run all the way down here, but then I would expect the gap to close in the same day. Only on the 5-minute time frame this is. On the daily time frame, 4-hour time frame, the gaps can last a lot longer. But because this happened, the market fell down. It didn't stop me out, and then when it rejected, I was happy to enter into a second position on the understanding that the gap would close. So the reason for my trade still stood. I didn't get stopped out. It created the gap. This candle rejected. So I was happy for a second position. Now, a lot of traders, they're going to see this move into negative. I mean, I can't even remember what it was. Let's have a look. So we were minus 20 points at one point. I didn't bail out. I followed my rules. I actually added a second position. Now, I don't do this every time, but because of the reasoning that I've explained, I was happy to do it. As a regular trade, you could have just taken this as the pin bar and entered above the high. It would still be working out very nicely. But yeah, so for me, it's really important not to panic when you're in a trade, because quite often when you think it's moving against you, if you actually look and analyze the chart, there's a lot of evidence that it isn't quite moving against you yet. And the gap was the main evidence for me, and then the rejection on the second candle. I was confident that this market was going to push higher. And the market for me is already it has been very negative over this week. But the way it opened today, I had it as slightly oversold. I was expecting a bounce of buyers to come into the market, especially with us opening down. And we closed up here at the 126 levels, and then we opened all the way down here. So with the market being already oversold, I was happy to take this as a long position, expecting the market to get back up to at least the sort of 120 levels. So hopefully it works out. We will see, and I mean, I'm already back into very nice profit. I wouldn't let this move against me now. And because I've been doing all of my videos on the PC of late, I can't actually remember how to pause this video on the laptop. So what I'll do is I'll edit it once the video is completed and cut it down, hopefully. This will also, I think this is going to be my last week of trading before Christmas. I was going to trade next week, but because it's the week leading up to Christmas, I'm expecting a lot of the, I'm expecting a few of the days to be very low liquidity, low volatility. So I'm just going to take the week off. I've had a great year, so I may as well have a week off and lead up to Christmas, try and get into the festive spirit. I think my girlfriend will be happy because I'm not sitting in front of the computer every day. So yeah, it's moving up nicely. Because I've got the second position now, I'll probably close it around the 6120. If I didn't have the second position, I only had the first position, what I would do is when it got up here, I'd just bring my stop to break even, and I'd look to get out at around 6125, maybe 6124, depending on how the market reacted. So we're pushing higher, we're almost up at target. Although my stops aren't at break even, I should also note that my mental stops are break even. So if this did happen to turn around and start falling down, I would exit at break even. So we're at 18. That's fine for the first position. Now, this is also quite important. You can see this is a daily support and resistance level. When my target is, say, 6120, I'll quite often get out just before, especially if the candle is going to close very close to it, just because I know that's a place where there is the potential for sellers to step in. I mean, you know, you can see it's flying through, it's going right back up. But on more trades than not, there can be a reaction clearly if it's a support and resistance level. So it's not worth, you know, for the sake of 1 point, 2 points, allowing the position to then run against you. Okay guys, so hopefully that was helpful. You could have just taken this off of the zone as your pin bar entry right here above this one. It was a market dynamic trade for me, so it was slightly different. But let's say you had taken an entry after this candle. Let's just say the market had broken the high before it fell down. You had this gap on the 5-minute time frame. Quite often gaps close very quickly, so even though the market looks like it's moving against you, once you get the rejection, I was fairly confident that then the gap would at least close. Okay, so next week there won't be a live trade, because if I'm not trading, clearly there's not going to be a live trade. I will still do the review video on the Tuesday and post it on the Wednesday, and I'll keep the blog up to date. Okay guys, I hope you all have a great Christmas. I hope you've had a great trading year. I'm James Orr, and thank you. Okay, I just want to quickly add to this video. So I'd said that if I only had one position, my initial target would have been up at the 6126 levels. And because I had two, I exited just before 6120. 6120 is also an important level. However, we didn't get a reaction there. Now, if 6126 had been my target, and if I'd set a limit order at 6126, first of all, you can see I wouldn't have been taken out of the trade. But I always exit my trades manually. This is the reason it's quite a good idea to often exit just before the market reaches an important level. We can see the market went up, it touched the 6126 level, and then instantly rejected off of it. Now, for me, I would have got out around about 6125. I would have waited for the market to push up into this area, and then I would have seen the rejection, and I would have just closed the trade. And what happens to a lot of traders is, especially after they get a very strong bullish bar like this, in their head they'll be thinking, oh, I want to hold on to this position. This could be an enormous move. I could make 40 points out of this move. So the market pushes up, it rejects. It's still a bullish candle, but then the market rejects. They hold on to their position as it's rejecting. It gets down to here, and then now their mindset changes into, oh, I really should have exited up here. What I'll do is I'll just wait until the market comes back up there, and then I'll exit. The market just keeps falling away. There's no way to tell if this market is now going to go back up there. That's why you should set your targets, your initial targets, and if it's at a key level like this and you get rejection, either close part of your position or just exit. You know, for the sake of a few points, just exit your position, lock in your profit. Don't let something like this happen to you.